Hey, what's up, everybody? So I'm actually about to head into the gym right here, and I had a pretty, I guess you could say, a successful trade, and determined by the amount that I have in the account and the percentage wise, and it was probably about 20%, 25%. But here's just a quick video on why the number one reason why Forexes blow their account, the number one reason, and here's what I found. And this is just from my own personal experience. From personal experience, and then it just got reaffirmed through reading this book that I'll tell you at the very end, that completely will transform your mind and your attitude, and to help you think like a professional trader. So here's the number one thing. It's focusing on what you can get instead of what you can lose. You know, they always talk about, you'll see people even online, you'll see it like, hey, like, set a daily goal, how much money you want to make, and this and that, 50 bucks, 100 bucks, 300 bucks. And then you do the calculations and you say, hey, if I can average this amount, then I'll be making an extra 10,000 a month, $100,000 a year, a millionaire, whatever. I can guarantee that you will fail if you do that, because you're focusing on the profit, the money, instead of focusing on the risk. There's a book, and it's not the book I want to recommend at the end, but there's another book called, it's a book by, basically it's a collection of traders, and they do a bunch of interviews. I don't have the book on my mind right now, but leave it in the description. But one of the traders is Paul Tudor Jones, and he's famous. If you're in the trading world, obviously you know who he is. Billion-dollar hedge fund, really popular guy in the trading space, obviously, hedge fund manager, right? And he says in his excerpts in the book, and he talks about how he's always frightened of the markets. He's always thinking about losing money. And if you read it throughout the book, a lot of traders are always talking about risk management, fear of the markets, respect for the markets. They're not talking about how much money they can get. People that are focused on how much money they can get from the markets, they blow their accounts. I'm telling you, I've done this so many times. I've blown multiple accounts. Ask any trader who's probably successful now has blown accounts. When you're focused on getting the money, you blow accounts, because it inhibits your ability to accurately assess risk. The question you should be asking, not how much can I get? How much am I risking per trade, right? Or another question, what will happen if I lose this trade? How much am I willing to lose on this trade? These are the questions you ask. And so why would you ask these questions? Because even if your analysis is accurate, you're going to see courses out there that are going to say, like, this is the strategy, that's the strategy. In reality, all the strategies work to some degree. The deciding factor is you. It's your mental processing. It's how you think. Okay, yeah, it's you. So you're the determining factor. You determine through your mind, through your attitude, through your expectations, through your intentions, your psychological processes that go on in your mind. It's you. So you have to always ask yourself, how much am I willing to lose on this trade? And you got to stick to it. And know this too, I don't care if you have the best fucking analysis in the world, best technical analysis, the greatest entry, there is still a probability that you will lose that trade. One of the biggest attitudes and beliefs that I adopted, coming from Mark Douglas in his book, Trading in the Zone, is you don't have to know what you're doing to make money initially. Which means it's not all about your intelligence or your smarts or your analysis. It has nothing to do with that. It has nothing to do with that. Over time, you learn how to, put yourself in a place where you can have an edge, but it has nothing to do with that, guys. You could close your eyes, press the button, and then make money. I've heard stories of a lot of people who didn't know what they were doing and made thousands of dollars on Forex. Now, will that continue? Most likely not, because there are other factors involved. So you've got to understand that, you've always got to be thinking about risk and money. Always got to be thinking about how much am I willing to lose on this trade. And the worst thing, I heard this quote, the worst thing about success is a little bit. When you start making money, your brain automatically shifts over into this state of like euphoria, basically where you think you're invincible, basically where you think you figured something out. In all the traders that I've studied, they always talk about the moment when they think they figured it out and they're on a roll and they think they're hot, they have their biggest loss. So this is to prevent you from even going down that route. Be humble, man. Be humble. And understand that, hey, you won this trade, you won this trade. It is what it is. It could have easily went the other way. It's not because you're that brilliant or that you're that smart. Has nothing to do with that. To be profitable in the long run, you have to always be thinking about risk. You got to always be thinking about the risk all the time. How much am I willing to lose on this trade? How much am I willing to lose on this trade? I ask myself all the time, what if I'm wrong? How will I know that I'm wrong? See, most people don't want to do that because they put all this work into the strategy and the analysis, so that I go, it has to work. And then if it doesn't work, it's because, oh, I need to study more. I need to study the charts more. No, that's not it. That's absolutely not it. I guarantee if you could search online to search people, you'll find dudes who do all the charts. They got all this shit everywhere. All these goddamn analysis charts everywhere. Then you have dudes who have barely anything on there and they're still profitable. The same people. Because it's not about the charts and the analysis. It's about their mind. It's about their mind. So, to, finish this video up. The biggest thing is you need to understand, like, questions. Not how much can I make off this trade? How much am I willing to risk? I don't care if you got a $50,000 account, a $5,000 account, a $50 account. How much am I willing to risk on this trade, right? And, the more money, the bigger the lot sizes, the more volatile it's going to get. They always say risk 1 to 3% of your account. It doesn't sound sexy, but how the markets work is you compound it. You compound it. And maybe I'll have another video about that, about how small little wins here and there can add up over time. You can compound accounts. You grow accounts. You compound accounts. You're not flipping accounts every day. It doesn't work like that. It doesn't work like that. So hopefully this video helped you guys. Remember, always think about losing money. Always think about how much money am I willing to lose on this trade, and it'll work out for you. And that's what's helped me out, to be honest with you. So talk to you guys later.